All right, Jason, we should be good at this point. Let me.
All right, it says you're on Facebook. Let me jump on Facebook real quick and share.
Hey guys, thanks for joining us. So I don't know if you're in Houston. Did you see the lockdown memo? That's supposed to start tonight at midnight, or was it supposed to start at noon?
Oh man, honestly, I have no idea.
Should be good. All right, so you're on Facebook. Thanks for joining us. Good. All right, there it is. So I can share this too. Let's get through and pay some bills if you don't mind, guys. We'll go through it. Great, Bob. We'll read that in a second. Perfect. Hey, we've been talking about raising money and all kinds of other stuff. So I just want to put a disclaimer that when we talk about this stuff, if we mention what we're doing, either in passing or in detail, that we're not offering securities. You'll have to talk to Brian. You'll have to fill out a lot of paperwork. Anytime we talk about syndications, that's really only for people who have an existing relationship. And so when we talk about it, it's for demonstration purposes only. So if we do talk about our fund, that's an SEC regulated investment. You guys have got to qualify for credit investment. Just getting this out of the way, since we are picking up a bigger and bigger audience, I want to make sure that they understand that we're not actually soliciting on this stuff. We're just trying to give you some updates and things that we're seeing. If you want to work at Mr. Texas Real Estate, Texas 281-401-9008. I talked to our newest agent today. They are ready to go. I told her we have about 7 rentals, and I think we'd like to try and collect some couple months in advance if possible. So she's going to start working on that. And I sent her over an 8-unit that we have inside the loop that we might want to add to the syndication, Jason. So moving forward on that. Hey, every night we're on 1070 a.m. here in Houston, the AM. We're on from 9 p.m. to 11, so check us out. If you want to really get in touch with us and see what's going on a sort of hour-by-hour basis at this point, check out our Facebook group, Mr. Texas Real Estate, Jason Bible, Robert Orfino. Join the group, and we'll get you in there. So some of our sponsors, Jet Lending, they are lending. I submitted a $700,000 loan application last week. Appraiser's going out there today or tomorrow, and I'm hoping to close by Friday or next Tuesday at the latest. So excited about that. Give those guys a call, 281-872-7800. Alex, Rob Trigg, those guys can help you out. Patton, they're still closing things. They're technically an insurance company, so Jason, I believe we think they're essential. So we can still get some stuff closed. Quest will be on tonight.
Yes.
Tonight for the Trillionaire Mixer event, whatever that is. So we're going to be on tonight. Check us out. Go to Quest. You guys know them. Maybe time to get your 2020 Roth going. Obviously, we love them. We work in their building, so we'd love to have you on tonight. Capital Concepts for smartmoney.com. These guys are pretty famous for being able to lend into a flip, into a hold, even though the non-QM market has tied up a little bit. FHA investment products are still available. And I think once we get clarification on the stimulus bill, I think the non-QMs are back to it the way they were in 7 to 10 days tops. That's my guess. Weimer Insurance Group, quotes at weimerinsurance.com. Make sure you email your quotes there. If you have a less than 10 or 12 house portfolio, these guys are your guys. They're going to do very well for you. These guys would be perfect for you. Plans and permits. Got to get my stuff submitted over there. Construction is an essential trade, Jason, so our contractors are still working. Happy about that. Give these guys a call, 281-372-1555. We have an event coming up this weekend. We sure we can. We'll have a bunch of people online. It's a 2-day event, Saturday and Sunday. We highly recommend you check it out. We'll be talking about market differences, what's happening. Jason does Saturday, I do Sunday. So it should be a great 2-day class. We'd love to have you there. It's $97 for the 2 days online. It's not at the Quest building, it's online. So Guys, make sure you check that out. I'll send you the link when Jason takes over. And if you want to invest with us, if you're interested in what we're talking about, and our syndications and our fund, some of the other stuff we got going on, we already started talking with some people who might be general partners in our office building. So all that stuff, Brian can give you a pretty comprehensive conversation on. You can text invest to 281-401-9008, or you can go to mrtx.com, invest with us, and that will get you there. So, Jason, how you doing today? Let me make sure.
Sorry, I was talking to myself.
Yeah. How you doing today?
Not bad. Just watching the news, and as much as I'm going to hate this bailout package, it's probably what's going to get us kind of back to normal, if you will. Unfortunately, I think it's going to be another one of those nails in the coffin for the U.S. dollar. But hey, whatever. So I'm not the one that makes the rules here. I just play the game. So I think that's the best way to put that. You want to send this back over to me, Rob, so I can do some.
Yeah, I'll stop my part. Yep. There you go.
All right, let's see here. I will tell you this. I'll do a quick. Can I do video or no? All right, I guess not. For some reason, it won't let me do video. Let me see if I can get the share up. Desktop 1. All right, here we go. For those of you who are on our email list,
look at that.
Looky here. So this is the future home of the Texas Real Estate Investing Center. A lot of people have talked about putting one of these together across the country. Everybody wants to do one of these, but very few have been able to do it. Well, it looks like we're going to be able to do it. We contracted this property yesterday. The idea is that this will be a center for all real estate investors. You guys, if you're a one-man, one-lady shop up to a team of people who are real estate professionals, you are welcome to give us a call or an email, jason@mrtxre.com, and we'll get you the rates to get into our building. I've gotten a couple of questions. Hey, are you leasing it or are you buying it? And I said, no, we are buying it. So this is the goal here. How would you like to do all of this stuff under one roof? Walk down the hall and get a contract from a wholesaler, drop the contracted title, get a quote for insurance, meet with your lender about the deal, all that cool stuff under one roof. It's going to be an awesome place to be. It'll be an epicenter for Houston real estate. And I can see Rob and I building one of these in the other two markets as well. So if you want to be our neighbor, this is where it's at. It's at 290 between 610 and Beltway 8. It's 290 in Hollister. Equidistant from 610 and Beltway 8. That means right in the middle between 610 and the Beltway. It's 5295 Hollister. Great little building. We're going to have a whole lot of fun. If you are interested in it, just shoot us an email, jason@mrtxre.com. So let's talk a little bit about the virus. I found this chart to be fascinating. And you'll notice the United States is here. I still don't believe China is here. That's kind of a whole different thing. Italy allegedly is still kind of on the upward side of this curve, and so is Iran. So cases are still continuing to accelerate and mount, which is fascinating to watch. I've also loved all of the, quote, smart guys that think they know what they're talking about. All of a sudden, because you can do math, you are now an epidemiologist. One of the things, I don't know if they talk about it in this article, I got sent an article yesterday where they said, where this guy who was a math guy in Silicon Valley said it's statistically impossible for this many people to get sick this fast. And one of the things people don't understand about epidemiology is that it's not a constant, it's a variable called R naught. And right now they're looking at an R naught value of about 7. And the R naught value changes throughout the course of the pandemic. So be very careful when you're looking at some of these calculations that the guy may have a PhD in mathematics, but he doesn't understand epidemiology. The math is just a little bit different. So in any case, let's talk about real estate stuff. New home sales plunge in March. They tumble in March despite mortgage rates plunging. This was probably before what was happening in the mortgage market and the COVID virus stuff. But this is the most, I will tell you this right now. I'm going to tell you, and I've told you guys this for 2 years now. This will be the most important chart for the next run up in real estate. This is going to be all over CNBC and Fox and MSNBC, all those folks who are alleged experts in the run up in real estate. The red line is number of new home built. They call it number of new home sales, but it's really number of new homes built. And the green line is median new home sales price. And you'll notice in 2006, the market just completely bifurcated. It is still incredibly expensive to build a new home. And my prediction is we need to have some kind of technology disruption in order for that to change. And I don't see that changing anytime soon. It may with 3D printing, but I think that's still a decade away for single family. But looking at this gap here, and this has been updated into 2020, so I'm going to add this to all my slide decks. But the price of real estate ain't getting any cheaper. I will give you guys the common theme today with the trillions and trillions and trillions of dollars that are going to get printed through the Fed and the Treasury, or through bailout packages approved by Congress and the executive branch. My guess is it's going to land right now. I want to say we're at $3.7 trillion, 3.7 to 4.2, depending on who you read. I think by the time this crisis is over and all of the stimulus packages are done, by the way, this will not be the last stimulus package. So why the Democrats and Republicans are fighting over it, I don't know. It's like watching a bunch of children. I think the ultimate end for this thing is going to be somewhere around 10 trillion, which is about half of US GDP. So that's just my prediction based off what I've seen happen in 2008, 2009, all the way through about 2012. Now, the question is, where does all that money end up? And a lot of it ends up in real estate. Absolutely ends up in real estate. One of the things I can tell you that this has happened in the last 48 hours, and I am so glad to hear it. A lot of big folks, Kudlow, what's the guy's name? Bankenfield, who used to run Goldman Sachs, and Trump have even floated out this idea that, hey guys, we may need to open up parts of the country again. We may need to get this thing opened back up as early as next week. And I don't blame them. I mean, if we can't slow this thing down in a couple of weeks, well, let me back up for a second. Houston's only been closed for a week. And it's amazing for me to see the number of businesses that are already closing, which tells me that they probably weren't as healthy as they should have been. So it'll be fascinating to see who in the real estate investor community and the real estate services community survives the next week. Bob said Trump all but said he's opening last week during the press conference yesterday. Yeah, I think they are just like. Here's the problem: you've got all these Americans have all this idle time, and I've noticed the divisiveness, at least on Facebook, has grown exponentially. So things are not getting better from a mental health standpoint. I think they just open this thing up and see what happens next. I mean, they've tried to squash this thing as best they can, but at some point you got to open this bad boy up. So that's the conversation they're having in the White House right now. Now it's funny, they're talking about hot zones. Another little bit of virus update, although I couldn't find the article from this morning. But if you guys remember a couple of days ago, I predicted that the numbers in India were not right. And there's an article somewhere, I saw it this morning, I can't find it, that they've essentially put the entire country in lockdown for 21 days. That's a country of 1.3 billion people. I knew that virus was running rampant through India, but there was just not enough testing, and their healthcare system absolutely sucks. So they're just going to quarantine 1.3 billion people for 21 days. So we'll see how that works out. This is kind of interesting. Some optimism. Some businesses are starting to see the end of this thing. I think as these packages get rolled out, I think we will start to see the end of this thing. And folks are going to get back to work. And and that sort of thing. Rob and I have been on the phone with just about every lender in town over the last 24 hours. And the consensus I'm getting from them and from some of the national folks is we probably got about 30 days to where they can figure out where the lending environment is going to land. Now, Fannie Mae lenders are lending, and short-term 12-month or or uh, or shorter loan terms, those folks are lending. Although I did see somebody that, for whatever reason, they locked in a 30-year at 7.5%. So there is some long-term lending out there. Fannie Mae is still backing loans, and but their rates are a little bit higher. So that's the only disruption we're seeing. The big concern for Rob and I yesterday was, man, if we go into lockdown mode, are we still going to be able to do construction? And one of the exempt businesses is residential and commercial construction. So our guys are getting rehabs done. They're doing a great job. It's working out well for us. There's no traffic, and it's pretty easy for the guys to get in and out of Home Depot right now. So that's working out pretty well for us. So I'm already starting to see the end of the tunnel on this thing. Now, I should say, from a real estate standpoint, I'm seeing the end of the tunnel on this thing. The only thing that has me concerned is what is going to be the loan forgiveness. What is going to be the mortgage? Like, the mortgage environment has me a little concerned, and so do the evictions. And my dad and I were chatting yesterday, and he said, the sad thing about the news media is they make it seem like everybody works for a bar and a restaurant. And I said, you're absolutely right. I do not believe the terrible, to a certain extent, economic news. Now, I totally believe what's going on in the market. The financial markets are in peril. They were in peril. They really were in peril before. But I'm not buying this whole Main Street narrative that, just because a couple of your local bars and restaurants shut down, that all of a sudden everyone needs mortgage loan or mortgage forgiveness. I'm not buying the correlation there. The statistic I saw the other day was 55% of the country can continue to work from home. So, the other 45% are not baristas at Starbucks. Like, I'm just not buying that stat. I think they're blowing this thing way out of proportion on that side of things, which is one of the reasons why I said, and I've gone, and I'll tell you guys right now, I've not taken down any of my posts, and everybody can go to my website and they can see all the emails I've sent out with regards to this particular event starting March 1st. And you will see a remarkable amount of consistency in there. Now, all the stuff that we've predicted has actually come true. Today was the last prediction that we made, where we said, look, we think that Houston will eventually get, quote, locked down. And that's exactly what this is. Although, truth be told, I don't know the difference between today and yesterday. But I don't believe for a second that the world's going to get thrown into this, or at least the United States is going to get thrown into this, huge recession simply because of baristas can't serve $4 coffees. So it will be interesting to see, at least on the manufacturing side, how that impacts things. We were chatting with our commercial broker yesterday. He does sit on the HAR board, and they were chatting with an economist. And one of the things that he said it's kind of the same thing that we've been saying for the last 2 weeks. He said one of the things he said that he thought was novel is manufacturing is coming back to the United States. And I said, I completely agree with that. In fact, due to the tariffs, a lot of these companies were bringing manufacturing, including Chinese companies bringing manufacturing to the United States to service American clients. I totally see that happening. And in fact, when you start going down the list of which states and which cities that manufacturing base is most likely to occur in, it's going to be Houston, Texas. They're not going to California. They're not going to Florida. It's too far east. California is a nightmare for businesses. They're not going to New York because of the regulations. They're not going to Atlanta, Georgia. They're going to end up in Texas. And it'll probably be in Houston because of the hub here, because of the shipping that we've got here, and probably all the way down to Corpus Christi. I can't imagine a scenario in which Corpus doesn't grow out of this whole thing because of the expanded ship channel they have there. So it is highly, highly likely over the next couple of years that Houston is going to grow even faster as the manufacturing base and the transportation base grows even larger here. And I can certainly see more companies relocating to Dallas-Fort Worth. If it's not their national head or their international headquarters, certainly their North American headquarters will move to DFW. That seems to have been the trend for the last 15 years for most companies that would move some of their operations here to Texas. So I'm looking at the landscape here, and I'm seeing a lot of positive things. Now, if we start talking about the marketplace, the capital markets, those are going to be kind of bruised for a while. The lending environment will improve over the next 30 to 45 days. And I will tell you this, guys, and here's my fire and brimstone. If you think real estate's expensive now, just wait. If you think real estate's expensive now, just wait. Real estate, particularly residential real estate, let's go ahead and lump multifamily into that group, is going to get painfully expensive. We've already got a shortage of new homes being built in Houston affordably. There's virtually none. In fact, let's pull up HAR real quick. Let's take a look at, let me log in here. Matrix is the back end portion of HAR. This is what realtors use. We'll read all that later. I don't read any of that stuff. This is the last 24 hours here. We've got 324 new listings, 140 back on the market. That's a good sign. That's much lower. We do have some price decreases, but 301 houses or properties sold the last 24 hours. Pendings are up to 338. So we got some terminated withdrawals. That's no big deal. But real estate seems to be taking a little bit of a rebound here. If we go into, this is one of the things I like to look at. Let's look at single family. Most of y'all are buying rental properties that are worth less than $175,000. So let's see how many properties there are active less than 175 grand. There's 2,800 of them. And let me show you how big the map is. A lot of people think, oh, this is just Houston. That's really not the case. It's, It's all over the map. Hold on one second, guys. My internet is painfully slow here at the house. We have 4 people that are using it. So, all right. Let's move in here. These are all the houses. So when you get into Houston Metro, which I really, right now, when I'm looking at Houston Metro, I really include everything inside of 99. If you're outside of 99, that's kind of way out there. We're only talking about less than 1,000 houses, a couple of hundred houses underneath $175,000. There's just not a lot of them. And for those of you who are landlords, the easiest way to make $1 million in real estate is to buy 10 houses and hold on to them for 5 to 7 years, and they'll double in value. I mean, doubling in value is what, 7, 8, 9, 10% year appreciation. And these things are appreciating so rapidly. In fact, what we can do is let's take a look at the pendings, option pendings. I wonder if we can look at less than, let's call it 15 days on market. How many went pending in the last 15 days? 782 properties under $175,000 went pending in the last 15 days, which out of that 3,000 is what? 40%? Half would be 1,400, so 25%. So 25% of the total inventory below $175,000 went pending in the middle of this COVID crisis. So if you're a landlord, you're buying properties as rental properties, I don't think you have anything to worry about. No, let me back up. You do have one thing to worry about. And that is, how many properties can you buy before they no longer cash flow in Houston, Texas? That's your big concern right now. How many can you buy before they no longer cash flow in Houston, Texas? This is in the middle of this silly crisis, and we have 3,000. We have 3,000 on the market in the last 15 days. 785 of those went pending. You can see it right here. So 782 went pending in the last 15 days. Let's, just for grins, let's see what it's like in the last 5 days. 389 went pending in the last 5 days. That means since the lockdown, or what are we calling this? what are we calling this? It's not a lockdown. What are we calling it? The closure of bars and let me put it this way. The last 7 days, let me make it 7 days. The last 7 days has not been a lockdown. It's just been the closure of everything that's fun. So no fun in the city of Houston or surrounding areas for the last 7 days. And we've had 500 properties. Now, these are single family houses. We've had 500 single family houses in the last 7 days go pending. About 3,000 are on the market right now. So 25% of the inventory got sucked up in the middle of this crisis. So again, if all of y'all are so worried about, oh my gosh, geez, the real estate market's going to crash. I don't think it's going to happen in single family or residential. Now, commercial is a whole different conversation, but I'm not seeing it in the single family market. I'm just not. There's nothing out there that says the market's going to crash below 175. Now, when you start getting into $300,000, $400,000, $600,000 houses, the oil and gas impact is quite high, and so is healthcare. And I'll tell you where the problem is in healthcare right now. These people are working 9,000 hours a week. They don't have time to go look at houses. You know, if their spouses are not in healthcare, they're busy watching the kids and doing all that nonsense, or sitting at home working and trying to manage the kids while their healthcare spouses are at the office or at the hospital or at the clinic or whatever it is that they're doing. So I'm not buying that real estate is in this downward crisis, and there's going to be people keep saying there's going to be all these foreclosures, are just so incredibly uneducated. It's painful to watch. I'm beginning to, well, this is going to sound terrible, and this is going to go out to thousands of people, so it's probably going to bite me in the ass someday. But it is amazing to me how many experienced people in this industry are entirely uneducated about how markets work, about how the real estate market does work, about the capital markets and the impact on real estate. It is very disheartening to me.
It's high school, dudes. What are you complaining about? We know.
I know. Well, so then I'll tell you the upside of this thing is it's like you're playing in these marketplaces where, people wonder why we're growing so fast. And I look around, I'm like, these people aren't even our competitors. I mean, they don't even understand basic economic cycles. Like, everyone's running around screaming like, oh, man, you better look at these pre-COVID comps, bro. I saw that the other day. Like, oh, there's these, you better not be using the same numbers, making offers on properties. I'm like, what are you talking about? Look at this. The last 7 days in the middle of a crisis, we have 500 properties that went pending. There's only 3,000 on the market. 20% gone in 7 days. Like, it's so juvenile. It's not even, it's embarrassing how low the bar is in this marketplace. So while people are running around screaming the world's ending, I'm like, yeah, the world's ending in the capital markets. And yeah, we're in the middle of a healthcare crisis, and people are gonna die from this thing. That's one thing I've said. I'm like, let's all go ahead and do our little shelter in place. But then once that is over, I don't see any crisis coming after this. Now, I see some pain in the capital markets. I don't think we should do these bailouts. But as far as real estate's concerned, people are predicting all these foreclosures. I'm like, I don't see it happening. I just don't. Not in Texas. Now, around the Boeing facility in Everett, which is north of Seattle, that's like the Conroe of Seattle, for those of you here in Houston. Yeah, there's going to be some pain there. But hell, their market's appreciated 30% a year the last 7 years. So I'm not worried about that marketplace either. So this whole idea that the marketplace is falling apart, and I've read it from multiple people who claim they're experts in single family real estate, who've been doing this 10, 15, 20, 25 years. And I've been arguing back and forth with half of them on Facebook. I'm like, show me the data. Oh man, you don't understand. There's like a crash coming, and no, there's not.
Jason, I'm on the street. You don't understand.
Yeah, I'm on the street, bro. And I'm like, I'm on the street too, but I'm also in the data. And all you have to do is pull that. Of course, most of these real estate guys don't have access to HAR, which I think is laughable at best. They're supposed to be an expert in real estate, yet they're not even licensed. They don't even have access to the best data source on the marketplace, which is HAR. I'm a real estate investor, but I don't have access to HAR. Well, you're kind of a pretender. So here's the deal. Look, the last 7 days, 500 houses went pending out of 3,000 actives. I mean, let's see how many sold in the last 7 days. That'll be a great little indicator. That can't be right. Is that right? Let me make sure this is right. Yeah, it is. Sometimes you got to refresh the data. That is absolutely right, isn't it? 2,000 houses. Oh, I'm sorry. That's the last 180 days. Let me do 7. That'll give us the last 7 sold. 7 days on market. Let me pull that out because that doesn't make any sense. 223 houses sold in the last 7 days. So that's just single family. So this whole idea that the market is crashing, the world's going to end. So 223 houses out of about 3,000 on the market. So a little less than 10% closed in the middle of all this craziness. Now you got to think, that's in the middle of all this stuff where mortgages and banks and all that have stopped lending. So they just closed out the ones they absolutely wanted to close. Another thing to keep in mind is, and again, Rob and I are, the little joke is, Rob and I actually are on the street, and we're seeing a problem with appraisals and inspections. So my guess is if appraisers could have gotten out there, this number would probably be double. Appraisers, inspections, inspectors, that sort of thing. But that's what sold in the last 7 days. Let's see what sold in the last 15 days. Yeah, 559 houses. So the idea that there's some kind of big crash coming and you better get your money right because there's going to be all this opportunity, BS. Total BS. Not happening. Totally not happening.
I just think there's logistic issues.
Oh, there's totally, yeah.
And which is, I was saying that we said yesterday, hey, for the next 30 days, it's kind of unknown. It's just, how do you get a home inspector out there?
Yeah. Yep.
Right? And if people are living in the house, are they letting strangers in the house at this point? I mean, it's logistics.
This is just like a hurricane. The hurricane just is blowing. A hurricane's going right now. We're all hunkering down. You guys all remember Ed Emmett? He'd say, all right, guys, y'all got to hunker down. And instead of hunkering down for 72 hours, we're hunkering down for 2 weeks. And now everyone's sitting there twiddling their thumbs because they don't see the danger, right? It's a little bit different when the hurricane's like banging on your door. Actually, no, I don't know about you guys, but the scariest thing is when the hurricane, it sounds like it's going to rip your garage door off. Like it's so loud, it's banging around. So right now, the hurricane is blowing through Houston. We have a 2-week hunker down. We're only a week into it, which is amazing to me. All these businesses are closing. I'm like, how did you survive a hurricane last year? We were closed for 72 hours. So this is just a logistical 2-week thing at this point. Now, I will tell you this, the capital markets are a mess. But I've been amazed, the more of the big lenders we're talking to, they're still open for business. They're sending their people through compliance training right now. Like everybody's just waiting for the storm to pass. And then it's going to be back to business as normal. No different than a hurricane. Really no different than a hurricane. And in fact, what's crazy is people are still contracting houses and closing them in the middle of the hurricane. It's like going over to the title company on a Cat 3 hurricane, driving over there in your truck and the lawn chairs and the pergolas and what else ends up flying across in a hurricane? Trampolines flying over I-10 right now. And people are going to the title company to go close. So I'm not really buying this. There's going to be a crash in real estate. Now, there's going to be absolutely some pain in the capital markets. And I don't think the bailout's going to solve that completely. But for those of us in real estate, people running around saying there's this big real estate crash coming, I'm not seeing it. I'm just not seeing it.
Well, let's, again, from our perspective, we're buy and hold, right?
That's true.
So I don't think there's a flipping market to be had in the next 6 months.
Oh, yeah, I wouldn't want to be flipping.
So I think there's some constraints there. I think unemployment is going to be very serious here. I think we'll have the numbers in a week or so. And so that absolutely affects people's buying power and all the other stuff, right? So we will see that. but they do need a place to live. I have yet to see any sort of loan forgiveness from the non-QM market. So I have not seen anything from these non-QM lenders who trade the paper every single day, right?
Yeah.
So, tomorrow we're going to start making a lot of phone calls. Now, I don't think there'll be a lot of foreclosures from the homes. I think landlords are going to get hit. What the FHA thing that I just read in the LA Times said that FHA, if you are a landlord with an FHA loan, you can call up your lender and they will, as long as you don't evict the people, they'll work something out with you. So that was pretty interesting. As long as you don't evict anyone, and but I haven't seen anything from the non-QM guys, right? And so that's our task tomorrow. Start calling every single one of our lenders and what's the dealio?
We're ready to get all this stuff refunded, guys. We're ready to go.
Yeah, so I think a lot of tenants just aren't going to pay. I mean, they're just not paying, right? So I don't think if you have an FHA mortgage, I think you're fine. I think you'll be able to work some things out. I think you're going to have to get on the phone or start emailing and filling out these stuff online and get all that stuff figured out. It's just guidance at this point. I think that once Congress gets through this big stimulus bill, they'll have some real national definitions of foreclosures and evictions and all the other stuff. Right now, it's just sort of, policy here, governor, order here, that type of thing. I think we'll see some guidance on that in the next 10 days. And hopefully they won't forget the non-QM market, right? Because what do you do if you have, a whole bunch of properties with these non-QM guys, which we used a lot? We are absolutely 100% paying all our mortgages April 1st. Every hard money loan is getting paid April 1st. And we're even making a payment on our 506c crowdfunding American Recovery Fund. We told people in April it'd go out. We are. We have enough cash. We have our reserves. We did everything we were supposed to do right. So nothing's happening. Now, if things change and there are some policy, we're going to call and see, hey, what makes sense? I'd rather not drop everything I have right now. So that's pretty important that we're doing that.
I'm still here. I think Rob had to tell Pops to chill out.
Yeah, I got the landscaper and the pool guy floating around.
Oh, it's chaos over there.
It is absolute chaos. So I as landlords, that's our issue, right? We're in the unknown. We don't know, and it'll get sorted out, right? And we're not overly worried about it. We're still in stabilization mode, so we've got some issues that we're going to deal with, but I think our biggest exposure, Jason, is our Airbnbs, and we're still at about 50% occupancy. So that's what we're looking at. Someone asked a question, Jason. Where do we get money? Private lenders, hard money lenders, banks? Well, now's a very good time to have established some relationships over the last 2 years, right? We went right to the bosses at Jet Lending and got our stuff sort of fast tracked because we have a relationship over there. That's our lender that we have a relationship with. We've got lots of private lenders. In fact, Jason's task this week is to call a whole bunch of our private lenders and let's find out where everyone's at. We want to know where their guys' thinking is. Local and regional banks, I would be guessing, are going to have some constrictions this week. I think we'll see some of that coming down as they sit down and talk to each other and try and deal with it. And the non-QMs have stopped. There is hard money on the street. That's gettable. And if you still haven't used your FHA long-term financing for rentals, I think that's still gettable.
Let's see. I got some other questions here. Well, yeah, I mean, hard money lenders, you're just not going to do anything on long-term financing unless it's a Fannie Mae loan, and you can only get 10 of those anyway. So we don't talk a whole lot about Fannie Mae loans simply because most real estate investors, they want to buy more than 10 properties. Well, let me put it this way. People in our group buy more than 10 houses. Folks who talk about Fannie Mae loans that typically tells me that their investors don't buy more than 5 houses or 10 houses at any one time. I got a question about the gold standard here. So the last time this came up, Pete Olson tried to push through a bill in Congress to peg the dollar to a certain price per ounce of gold. I just don't see that happening. I'd love to see it happen, but I honestly don't see that happen. The market is too crazy right now. It would be cool, but
and again for us, I mean, I think I talked to our attorney this morning, who had some clarifications on something else we were talking about. But she said, if your tenant doesn't pay the rent, call whoever owns your note and tell them my tenant's not paying the rent. What do you want me to do? And some note holders are gonna foreclose, and some are not.
yeah.
They probably won't get anything through the court system here for another 60 days, right? So you've got time to figure it out. If you're an investor and this is your world, right? Then these are the days you deal with. Hey, my lender's saying he's going to take back the house. All right. We get it. Totally get it. Or my lender said, I've got 90 days to get everything at my house in order. Great news, right? Or Freddie and Fannie are saying 1 year. 1 year, they'll work with you for 1 year on all your loans. Great. So instead of being worried about the unknown, it's time to start working on it. And that's what we're doing tomorrow. We're just calling every single note holder that is an institution, right? And private lenders will get our phone calls on Friday. So tomorrow, every single one who owns a note on us with some sort of bank or fund is going to get a phone call, and we're asking, what's the deal? And we're prepared to make a payment on April 1st, but what about May, June, and July? What are we looking at?
I don't think, the more that, what I've really followed in this whole thing is the government response. When we started following this back in, I want to say late January, then early February after the Chinese festival there, we were watching shipping traffic out of Asia. Yep. And we noticed a change in the shipping traffic. And then we also noticed that's when factories started shutting down and all that other stuff. And so we seriously started having conversations about, okay, what happens if we get a shutdown here? And how long is it going to last? So while some people were running around saying, oh my gosh, this is just the flu, or it's a hoax, that's my favorite. This is just a hoax, overblown, media nonsense. I'm like, look, you can have all the opinions you want, but at the end of the day, somebody's got to make some business decisions because the policymakers are going to end up shutting down portions of this country.
Yeah.
So the other side of this thing is that Americans don't do well when they're not consuming. So my guess is this thing gets opened up next week, April. I don't know what the target date is. No, March 30th is supposed to be for Houston. Maybe they hold it for a couple of days, April 3rd, and I don't think they can hold Americans inside much longer than this. It's going to get.
And the other thing is the hard money lenders we did talk to yesterday said we're expecting payments. Like there was no discussion, right? It was like, hey, we're expecting payments. So here you are. You want to be a real estate investor, right? This is the stuff you're going to deal with, and it's don't be losing sleep or hair or eating lots of cookies. By the way, there is absolutely cookie rationing going on at this house, and I think some people are violating that ration here. We might need to start enforcing a little bit harder.
You got to start putting people in jail.
We might have to put people in cookie jail. Yes, for sure. But hey guys, look, this is our business, right? And if you got a weak stomach now, maybe this ain't for you, right? You're gonna have to get up, figure these things out. If you've got projects out there, I got one guy who's like, yeah, man, I got 2 refis I need to get done. I need a non-QM. I need. I'm like, dude, relax. Just talk to your lender. This is what we're doing, guys. And look, everyone's got a Facebook meme about opportunity when other people panic, right? They love that shit. Love to throw Warren Buffett up on their Facebook, but hey, here it is.
Oh, that's a good point.
Right? So who's calm and cool and looking at the horizon saying, okay, I got to deal with this, I got to deal with that. And how many people are out there freaking out? We're going to get some rent. We may not get all the rent. So what? We're going to make all our payments come May 1st. Hopefully things are back to normal, or we've got some guidance, and we're moving forward. We've got a number of hard money loans out there. We plan on paying them. My contractors are working every single day. We're moving things. We are raising money for the syndications and for the fund, doing very, very well. And in our syndications, we've moved to equity only. I think we have two. Yeah, we have 2 loans left on our syndications. So we're going to be taking one out this week, and another one out next week if the investors who are talking to us bring in their money. So we'll have 1 note on our syndication, Jason. And that's a strong position because I don't have to worry about making a mortgage payment. We switched our syndications to equity the beginning of the year when we were talking about all these crazy capital stacks out there. People, listen, we like all our friends who do apartments, but I did a walk with someone on this apartment, and I'm hearing tales about Coke machines and toilet bowls and laundry mats, and I'm like, this is ridiculous. Like, who thinks that's real? Is it the bank? And so we took all our apartments and we moved them into syndications and we moved them into equity. Meaning everyone's going to make great yields on this. It's a 5-year run. And today I have 8. We have 35 and 27. We have 50, 35, 42, 62 of our doors. We're not sweating. Everything is still moving forward because we moved out of the debt service out of those and moved into equity, which was a big, big deal for us. So what will a lot of people learn? A lot of people who are buying and holding are going to learn really quickly here. Raise private equity versus private debt.
Well, and on the equity side, they make more money in the long run anyway.
Oh, hell yeah.
And and there's no prepayment penalties when you're like, man, the market's really hot, guys. Let's do a vote with the partners and dump this thing and go on to something else. So there's a lot of advantages to the 100% equity model.
Yeah, I think we're pretty solid again on this stuff. So 62 of our 100 and something doors are in an equity position, which means we're okay. A lot of the fund stuff, the fund is really strong. We have a boatload of cash in there. So I went through it, Jason. We've got at this point like a 19-month reserve. Now we're not going to use it. We'll use a little bit of it. We got insurance payments and things like that to make sure everything stays current. But the fund is great. Our exposure is the Airbnb stuff, which is legit. We've got some issues we got to deal with there. Thank God I've got 3 of the Airbnbs in Fannie Mae loans, so we should get forgiveness on that. And the other ones, we got to go back to our JV partners and let them know what's going on. So we're crunching the numbers and looking at that and trying to get a good read on March, see where we're at. And then the stuff that's coming in, we've slowed the pipeline down. Anything that we're getting a 12-month loan on, we're pushing up. So Jet Lending and some of these other folks can pull the trigger on. The other stuff that we're moving into 30-day right off the bat or 2-year loans has stopped. So we've been managing our portfolio and managing our growth with an understanding of trying to mitigate risk. We talk about it all the time to our investors. We try to mitigate as much risk as possible. And this is one of the things that we've been doing. We're good. So if you're going to get burnt on this, your takeaway is going to be, man, I'm going to raise equity. Go right ahead. Do that. Get yourself a little syndication together. Go out there, raise some money through the syndication. Do 100% equity. No more than 20% debt in your capital stack. And you'll be in good position. And same thing with the new commercial building we're buying. We talked to someone yesterday. It was like, hey, I've got a lot of guys that'll come in. And I ran the numbers last night, and I'm like, this is looking like a really great deal for everyone. And so, we'll get equity participants in that as well. And I think if you guys are looking for the money, I'd be looking for, if you're looking for short term, make sure you get, 12-month loan, no 6-month loans, get 12-month loans with a 6-month option to extend. And if you're buying and holding, I would be trying to raise money from folks that are interested in doing equity investments. And of course, if you want to invest with us, just let us know.
Well, that's all I got. We're gonna do these every day at noon, and just give you guys kind of the current stuff that we're seeing out there in the landscape, if you will. So I don't have anything else. Rob, you got anything else?
No, that's it. Hopefully, we'll have a better guidance tomorrow on the on where we are with the foreclosures and the forgiveness and all that other stuff. I will really spend some time today digging through all that, making sure we're in how we can alleviate, spread out, mitigate some of the stuff that we might be dealing with. But again, over about 40% of our portfolio is equity. So the people that we're talking to right now is just to invest in our syndication and buy out that last loan. But tomorrow we'll do a little update on what we can found on the foreclosures and evictions and what's going on. If we have to make a few phone calls in the morning, we will. All right, guys, if you're interested in investing with us, make sure you check out mrtx.com, Invest With Us tab. You can fill out the application. You can text us. We'll get you to Brian. All good. Thank you all for joining us today. We'll be back tomorrow at noon. Have a great day.